gold was barely over $1,000 an ounce. You've got, what, a 60% increase in the price of gold or something like that, or a 50% increase, and the gold stocks are basically unchanged. To me, that shows a tremendous amount of pessimism, skepticism with respect to investors on the gold rally that's been in a bull market for over 10 years. It is really climbing a wall of worry, and I think the gold stocks reflect that. I think before too long, people are going to start to appreciate that this is a phony recovery, that the rally in the stock market is simply a reflection of inflation, not economic growth. And as bond prices begin to move down, the Fed is going to be under increased pressure to announce QE3. And when it does, that will be music to the ears of the gold traders. Meantime, I wouldn't be waiting for that. I think that the dip is already a big enough one to buy. And I mentioned this earlier in the video blog, but think about this when it comes to the trade deficit and the current account deficit. We've got this record trade deficit right now with better than 8% unemployment. Back in 2008, before the financial crisis, unemployment was in the 5s. And we had a trade deficit this high. Can you imagine how big the trade deficit would actually get if we kept adding the types of jobs we're adding now and we actually brought our economy back down to an under 6% rate of unemployment? Can you imagine the enormity of the trade deficit? Also, as interest rates start to rise and our current account, our investment surplus turns into a deficit, I mean, this thing would just be spinning out of control. I mean, if you remember back in the 1980s, we used to talk about the twin deficits. Everybody talked about the twin deficits. What were the twins? It was the budget deficit and the trade deficit. And this is the late 80s, early 90s. Well, the twins are still there. They're bigger than ever. I mean, they're enormous. Yet no one talks about the twins. No one talks about the trade deficit. I suppose because it's gotten so enormous, no one even cares about it because we haven't had a disaster that we were worried about back in the late 80s when the trade deficit was a fraction of the size it is today. Well, the same attitude maybe is beginning with the budget deficit. Who cares about those? Those don't matter either. We'll just keep doing stimulus. After all, we got a printing press. Well, these twin deficits are going to kill us. They're going to kill this phony recovery and this phony rally in the stock market. Although I don't believe that the stock market is on the verge of a collapse like the Fed asked the banks to stress test, nor do I believe the real estate market is on the verge of another collapse. I believe the Fed will print too much money to keep that from happening. But the market that is on the verge of collapse is the bond market and the dollar, and in order to prevent that from happening, the Fed is going to print a lot of money, and that will put a floor beneath asset prices, but it will basically put a rocket ship beneath gold prices, and it will sink the dollar. And so I think that the reactions that we've seen this week in the Forex market and the precious metals market have gotten it wrong. And I also think, as I said earlier, the spin is wrong. The data points that we've been getting do not point to an improving U.S. economy. We are not resolving any of the imbalances that underlie our economy. The structural imbalances that led to the housing bubble, that led to the financial crisis, are being exacerbated, not alleviated. Everything the Fed has done, everything the government has done, is making our economy worse, not better, and the data points show that. Again, sure, temporarily, when you're inflating a bubble, you can create some phony jobs, you can create some excess consumer spending and government spending, you can create the appearance of prosperity. But all you have to do is look beneath the surface, and you can see that the real economy is not prosperous, it is in decay, it is deteriorating, and we are setting ourselves up for the next big crisis, and that's the crisis that the Fed is not even concerned about, it's not even worried about, nobody is talking about it, but we're talking about it here. Again, don't forget, I'm going to keep updating everybody on the situation more frequently than these video blogs in my radio broadcast at schiffradio.com. I do that show weekdays from 10 a.m. to noon on schiffradio.com, so don't forget to tune in. Again, this has been Peter Schiff. Take care, everybody. And don't forget, like the video if you want. That way we get more people viewing it. Take care.